Hey guys, my name is Micah. Welcome to my channel. And today I'm going to be talking about stocks. And this presentation is going to make you get rich. Okay? Basically, what we're going to be covering over this presentation, and it's going to have the stock that I chose. Now, I've been tracking a stock for a couple of months now. We're going to see if it did pretty good or bad. So, this is the stock that I chose. Now, here's the ticker symbol. And the stock is Abbott Laboratories. It's a pharmaceutical company. They are actually pretty big, and they're actually local too. Products like this, everyday products that people can buy, like at the grocery store, like for babies, children nutrition, and like protein stuff for athletes. And this is the meat and potatoes of stock investing. So you can't just choose a stock because you like their. I can't just choose Nike because I like their shoes. So you need to know why to invest in that company. So there's some important things like the PE ratio, the beta, and some companies actually offer dividends. The P ratio means that investors are anticipating higher growth in the future. So that's also good to know. The average market P ratio is 20 to 25 times earnings. The P ratio can use estimated earnings to get the forward looking P ratio. Companies that are actually losing money don't have a P ratio. So now this is what I want to do. So this is Yahoo Finance, and we want to look at the P ratio. So everything in the summary has shown up right here. Now this is very important to know. The average PE ratio is 22. So if you know that, and if something is higher than 22, that investors are anticipating a higher growth for that company. So Abbott is about 148, and that's well over 22. So that's perfect. And if you look at the stock market, and what I'm using is the S&P 500, and this is like the top 500 companies of everything. So technology, pharmaceutical, cars, everything into one. So like a mutual fund. And this is what this has done over the year. So this compared to Abbott, Abbott's done well, and that's based on that P ratio. All right. So the beta is a measure of volatility or systematic risk of a security or a portfolio in comparison to the entire market or benchmark. Beta is used in the capital asset pricing model, CAPM, which calculates the expected return of an asset based on its beta and expected market returns. So it's important to know that the average beta is usually going to be 1. That's the average. And we'll use the S&P 500. Now it's going to be about 1 for the average beta. Now let's go look at Abbott. So Abbott's beta is 1.5. Now, what this means, because that definition over here might seem a little confusing, what this means is the closer that the beta is to 1, the more it is going to match the stock market. So, for example, on September 24th, 18, it started to go down. And if you look at the stock market, around September 4th, 18, it started to go down as well. So, and that's because the beta of Abbott is close to 1. All right? And if it's over 1, that means it's probably going to do better than the stock market. And that's what Abbott has done over the year. It's done pretty well. Alright, now when picking a stock, you want to know, does it have dividends? Now you get more money this way because a dividend is a sum of money paid typically quarterly, so like every 3 months. Yeah, so it's paid out every 3 months by a company to its shareholders out of its profits or reserve. Yeah, so when you have stock in that company, you have equity in the company. So you own basically a small part of that company, and you're gonna get the profit, right? And you get more profit when you have dividends. To buy a stock, we can go to a broker. You can sit down with a broker, and he can do everything for you. He can research it, buy it for you and stuff, and he'll get commission off you for doing that. But since you're watching this video, you don't have to do that. So you can use apps. Now, this is an app called Robinhood. I like Robinhood because it's not going to take out commission from your earnings. Super nice, super easy to use, and if you invite people, you get money. The stock market has a risk factor of about 20%. So if you're not willing to take on that risk and you want to try it out, you're not really familiar with stocks yet, use a simulation. And this is exactly what I did. So I used a simulation to purchase and buy stock, and I've watched it over time, and you're going to see the earnings that we have. So a couple months back, I went ahead and didn't actually buy it, but I used a simulation to buy the stock, and I did it on September 16th, which was on Sunday. Usually the stock market isn't open on Sunday, but on the simulation it is. And I bought 14 shares, and each share was 68.49. So also in the app, I have my portfolio. I bought some other stocks too, but Abbott turned out to be the best one. Yeah, so the total cost was $957.88 for those 14 shares. And during the time period till now, which is December 1st, so I got $78.82 and a capital gain of 8.23%. So it's been pretty good. But if I was to buy more, I probably should have bought about 3 times as many shares if I had the money, and I would have got 3 times as much gain. So here again is what the stock looks like for the year in the portfolio app, the simulation, and it's been going up. And down here is Abbott, and up here is the average, the S&P 500, which is an average of all the stocks. So I bought in, if I was to buy in the S&P 500, I would have ended up down here around, so if I would have bought in at 2,800, I would have lost about $100 because it went down to 2,700. So for Abbott, I bought in at 65 bucks, and it went up to about 74. So that's where my 8.23% capital gains are. And would I be satisfied or disappointed with the performance? Definitely be satisfied. And Abbott did better than the stock market, and that's based on that P ratio and beta we talked about. So, did any news occur that will impact the company in the future? Now, Abbott did come out with a product they were testing, and that made it go up. And they also were announced that they were consistent, so that also made the stock go up. But remember that beta is also pretty close to 1, so as the stock market was going up, so was Abbott. Would I recommend someone to buy the stock? Yes, because the PE ratio and news that comes out, and it's a pharmaceutical company, so people are always going to need medical stuff.